Hello, everyone, and welcome to the first Monday Business and Markets Day in the month of February. I am boosting them off the deadly coronavirus still warming around the world and continuing to dent markets with China at the epicenter. The stock market in mainland China about 9% in negative territory as they get back to the trading floors after the long holiday. China oil demand is also down about 20%, according to Bloomberg reports early today, while the PBOC, that's the Chinese central bank, pumping about $174 billion into the market. The virus scare is hammering oil markets. The benchmark Brent crude down 5.12% since the outbreak, reading 56.26 early today. OPEC still scampering for appropriate response to expect the monetary policy committee of the monitoring, that's not the monetary policy, the monitoring policy committee of OPEC. That's the committee that monitors compliance among member producing countries to issue a response or hold a meeting in the next couple of days. Meantime, back here at home, the new tax regime of higher VAT and the general tax compliance and national identity take effect this month, with the latest monetary policy direction of the central bank causing some disquiet on Market Street in relation to system liquidity. And the earnings season has kicked off here at home with a raft of results for 2019. International Breweries PLC reporting a 3 months ended December 31st, 2019, swinging it to a 9.12 billion naira net loss as the company's revenue slumped through 35 billion naira. Earnings per share headed into negative territory, 106 kobo against 35 kobo positive in the previous period. Nigerian Breweries PLC is announcing continuation of its commercial papers floating Series 5 and 6, opening today. The Series 5 with tenor 180 days and Series 6 270 tenor paper looking to raise 34 billion naira. That's 34 billion naira to fund short-term funding needs. The last was 100 billion by Nigerian Breweries. Here in Lagos, the traffic in the country's economic and financial capital goes naughty today as the new ban on commercial motorbikes and tricycles take effect. That's all for today. It's going to be a very nasty morning, Monday morning, to welcome the new month. And of course, we're starting the new month with the first exclusive TV interview of the CEO at FMDQ Group. Bola Onodele-Koko is live here at our global headquarters to start the new month for us in this C-suit. Good morning. It's good to have you.
Good morning, boss.
Thank you. It's good to see you in the new year.
Happy New Year.
First time. 30 days. You folks had a lot to do. But again, the vehicular traffic in Lagos this morning is a new thing. It's a new one.
I guess something is being done to address it, so we have to take the short-term pain to get to
the long-term benefits.
Yeah.
Great. For FMDQ, it's been a couple of years coming through. So if you run us through very quickly what 2019 looked for you, and I'm sure 2019 also wrapped up to your first 5 years roadmap. Then we'll talk about the new roadmap for the next 5 years.
2019 was a wonderful year. I think it was the year where FMDQ sort of fully activated its business agenda and also its responsibility to the society. And for us, those are two ways to dimension an organization. Under the business, we'll look at corporate responsibility. That is very important for our shareholders and also the board of directors of FMDQ. And the brand enhancer for us there was the FMDQ Financial Market Empowerment Program, which we call the FMDQ Next, where we have successfully to date educated and empowered students in the primary schools, secondary schools, universities, the undergraduates, and also fresh graduates, over 415 to date. To us, that is important. So that societal part of things, what to give back to the society. Education is the flagship of FMDQ there. The business itself, we look at the financial performance, we look at the market development, which is really the number one focus of FMDQ.
You moved very rapidly from being an OTC to become a securities exchange, then you become you become a group within a very short space of time. What exactly were you driving at?
The big agenda is the gold agenda, which we've always shared with everyone. Gold represents global competitiveness, operational excellence, liquidity, and diversity. If we're going to make our financial markets globally competitive, we need to de-risk the financial markets. Now, that de-risking starts from exchange to a clearinghouse and then to the depository business. So in terms of the value chain, when you get on the FMDQ highway, your transactions are without risk. So under the exchange, the way we de-risk is to introduce products with the market. You remember the futures exchange, the futures, the OTC FX futures? That was introduced to de-risk the foreign exchange risk, and to date, over $33 billion have been traded or executed, as we say, on that product alone. And you can see that the FX market is much calmer than it used to be in the country. That is the de-risking under the exchange. And when you go to the clearinghouse, again, you need to de-risk the counterparty risk. What the clearinghouse does is to ensure that two counterparties that have traded can both sleep until the maturity date or the settlement date of their transactions. The last bit of it is the asset commitment risk, which is still exists in the market, but hopefully with the depository, we'll be able to de-risk again for this Nigerian financial market, where the same time that cash is given or paid is when the payer who is buying the security is getting the security, as in the millisecond. It has to be the same time through what we call the delivery versus payment. We have not achieved that in this country, and it's the agenda of FMDQ to make sure that happens. So when you look at the FMDQ, yes, we started as an OTC market. That was the vision. That was how we started, not the vision. But from day one, the founding fathers and the founding stakeholders, I thought FMDQ was going to play a major role and be an agent of change in this country. And that is what we're implementing.
Out of the entire product portfolio of FMDQ Group, where is the deep end? Is it the FX or the securities part of it, which are treasury bills, CPs, and the rest, and the bonds?
Interestingly, they're linked, you know. I mean, if you look at foreign portfolio investors, they come in through the FX market and they buy securities. But if you're talking of the share of the pie, the securities side would have the higher percentage over the foreign exchange. Of course, because of all the money market, you know, instruments, the securities, and the unsecured money market itself. So I think the securities, or the fixed income, I should say, would have a bigger pie. Now, when you drill down that fixed income, you start, you know, putting things in the buckets, and you talk of the securities, the commercial papers. The program today on that commercial papers, we've started that market from zero. We've gotten programs registered up to close to 2 trillion at the moment. That's been a lot of work. And the stakeholders, the registration members have been doing a lot of work with the corporates. The opportunities for corporates to tap the debt capital market directly, and what that does for them is they're able to tap and actually access money directly from those with surplus funds. And I think that is growing. The bond market we're all struggling with that, but the opportunities for Nigeria, because if you look at the bond market, the sovereign is about 9 trillion, whilst the non-sovereign is less than 1 trillion. That's not good enough. In a country with this sort of population and the size of the economy itself, we should be you know, thinking of a non-sovereign bond market underpinned by mortgages and housing credit that can deliver over 40 trillion in this country. Again, we're working out with stakeholders to see what we can do in that respect.
If you look at 2019, and you said last year was fantastic. On the side of the FMDQ group, how did you arrive at that? If you give us some numbers here.
You're talking of market
Of the markets,
turnover
yes, yes,
and the
yes.
securities that were issued. I think in terms of securities issued, close to $1 trillion. We didn't hit the 1 trillion mark, but very close to it. The market turnover for the first time crossed 200 trillion mark. And that was about 233 trillion. It's the first time since FMDQ started for us to have achieved a mark of that magnitude.
It's been a bit of a period in which the FMDQ, the operations, is buffeted by the bigger issues within the fiscal space and the monetary policy space. How did those developments impact on your operations at FMDQ Group?
When you say fiscal and monetary, what exactly are you talking about?
Last year was the election year.
Yeah.
We had a new cabinet in place by August.
Yeah.
Then there are a few fiscal issues. We're able to put the budget in place and all of that. They had the fiscal spending on that side, the land border closure. You know, the monetary policy side, of course, it was a lot of raft policy, unorthodox intermediation and activities by the central bank. Is the FMDQ, how did you manage to wade through this?
I understand what you're saying with your with the added points, but you have to understand that the markets sort of come at the end to support whatever policy is in place, or as people react to whatever the fiscal or the monetary policy, depending on that side, is doing. A major shift was the OMO bills and the Treasury bills market, which the market are taken as a fungible market, but the central bank sort of, with a policy in mind, wanted the two separated. The border closure and things like that will impact trade, and at the end of the day, have multiplier effects to the markets. Markets will be one of the impact in terms of foreign exchange and things like that. Again, it depends on that side of the foreign exchange market. Is it the official side of the market or the alternative side of the market? But FMDQ would always react, and that's the role FMDQ has to play, working with the stakeholders to either give operational support to the intention of the central bank, or to also provide communication, because the OMO bills and the Treasury bills market that had to be separated led to some issues in the market, and we had to be there working with the central bank and working with the banks to provide the necessary communication to the right parties, and also the operational support was a major challenge, but I think we're almost overcoming that. And the central bank has promised to support to ensure that the market is able to transit from where those securities were fungible to where those securities have to be seen as being separate.
In terms of the architecture that the FMDQ provides to support the moves by the financial regulator, the central bank, to achieve what is being done, and of course the DMO also on the other side, do we have what is robust on the ground to respond to these developments? At the central bank wakes up one day, decide on this, the next day move this way and another way?
I think both on the central bank has the capacity. The ideal at times is for parties to sit together, and most things, what we will call a fishbone, is done where all the likely impacts are well assessed before action is taken. But I think we have to be a bit realistic. At times, the central bank needs to move fast, and that is why we have to react at times, rather than where we have a situation that if we knew ahead, we could have planned. But again, as a very nimble organization, and also the market players, we all rally around to understand what central bank wanted to achieve, and we were able to put the operational support. I mean, there are issues from this. We see where the 10-year bond is, which is much lower than inflation. We have to think of where the pension assets will be invested. That is, pension of everybody is really below inflation. And all those things have to be discussed. But I think central bank, in its wisdom, the issue is, I once had a boss of mine that mentioned that we do not see what central bank sees. So at times we all think, oh, why would central bank have moved so fast without consultation? But again, it's because of what they've seen and what they think the impact is if those things are not immediately addressed. As long as you have a central bank that is willing to listen after the action is taken, and I think that is what we've seen in this respect, where the central bank governor accommodated us to us now reacted to the policy. They're not going to change the policy, but to say, okay, how can we support it? And there were, letters written out by the central bank under this Omo bills issue to address it. FMDQ also supported with the market players, of course, some communication, because some people offshore did not understand. They got advices that read treasury bills, and later they were told what they were in the custody was Omo bills. It was the market that made all these things fungible. But I think we're being able to address it. And the relics of the issues will also be willing to take to the central bank, because people that bought treasury bills that now want to sell, that believe they bought treasury bills, the treasury bills rate are like below 6%, and they will want to access that. So the central bank may have to play that role, because they will not want to sell it at Omo. And we have to think of the credibility of the market and the integrity of the market. So for so many of them that have the advices that printed treasury bills, and the banks have now seen, or the custodian is saying, but exactly what you have is Omo bills, we may need to take them to the central bank. And the central bank has said it will be willing to support, just to ensure that everything goes smoothly.
What are the lessons that you folks have learned at FMDQ from the 2015-2016 FX crisis and recession period, and the central bank trying to manage the FX market, the liquidity and all of that, the arrears and all of that? Are there lessons from this, the last three and a half year period that you're taking on board, moving FMDQ forward? Because you will have to continuously work with the central bank and the rest of the market in trying to be there to take care of the policy fallout, whether before or after.
Yeah, I guess the major lesson for the market on the crisis is hedging. We shouldn't always assume that interest rate or FX rate is going to be fixed. It's never fixed. And if central bank, as I said earlier, who is managing the macroeconomics and understands what the economy is, in its wisdom, feels that there should be a shift, then the market would have to absorb it. But there's a better way to go about doing these things if people understand that these rates move and it is important for them to buy insurance or to hedge. That is one conversation that we need to take to the market, and the market not to get itself into any false position of stability. And that is what you tend to see where the markets are not allowed to behave, because if they do, people will see the gyrations and see the essence and the importance of hedging. That is one area which is the de-risking part under the exchange that I spoke to, that we have to take to all the players in the market. And I think if you look at the FX market prior to 2015 and now, things are calmer. Not that people are not nervous, but they transfer that anxiety to the central bank or to someone that is willing to sell a hedge. And that is how a market should run. So in the past, I mean, each time we saw the crude, dance and head south, everyone starts panicking, buying dollars, front loading. Those things are disappearing, because all you have to do is to speak to your banker, buy a future contract, and then you're home and dry. And the central bank has supported that product since it came to the market, and there's been no single default because of the clearinghouse that we talked about. And that's how business is done, and that's how to develop this market.
So we should do that in the securities market.
We have to do it in the fixed income market, T-bills market, Homo bills market, and interest rate most especially.
Very interesting. We'll continue this conversation after the break. Bola Onodele-Koko is the CEO at FMDQ Group. Let's continue the conversation. Bola, you're talking about hedging and de-risking, and why we need to get everyone to understand that the market has to behave like a proper market. You think 18, 20% yield curve is going to be there for 1 year, 2 year, 5 year, 10-year permanent? It's not going to happen. So folks need to understand the gentle volatility, either to the upside or downside when you trade in the market. So what's the take moving forward from FMDQ on this? Are you communicating with the market? How soon will this be in place?
We'll do better. We're communicating to the market, but we're going to, improve on that communication this year. We hope to be able to launch products that things we're working on, but the legal framework is where the gap is at the moment. We're all looking forward to the KAMA Amendment Bill, which is the Company and Allied Matters Act, which has been amended. That will provide the appropriate framework for some provisions that will probably lead to the development of derivatives market in this country. And that's one market that we're all looking forward to activate. And on the back of that market, we see employment. There'll be creation of jobs and also capital pouring into this country. And when I talk about that capital, I'm not speaking to financial alone. I'm also talking of people, because that is the market that's going to bring quality people also who are experienced in the areas of clearing house operations and derivatives to Nigeria to work. And we're all looking forward to that. So in terms of communication, we have to improve on that.
In terms of 2020, how are you positioning for the new year, broadly speaking?
How is FMDQ positioned?
Yes. What else do you want to run with?
The alignment of agenda with the economic development program of either the central bank or federal government is an area we think we need to do a lot with. Because when you operate in an economy or a country, the matters, the issues of the economy would have to be what you want to support. And that is the proper alignment between what we want to do and prosperity to give either to the Nigerian government or to Nigerians themselves. And that has led to us tilting our mission a bit, to what we now see as our mission is to collaborate, to empower markets, to lead to economic progress and to deliver prosperity. Now, if you look at those three elements of that mission, the last part of it is prosperity. We want Nigerians to also hear about financial markets and understand that through financial markets, there'll be prosperity for them. Most of the issues in Nigeria can be dealt with through markets. And that is why for us this year, we're going to look at that, and we have started, look at the economic development agenda and position what we need to do to support the economic development agenda of the central bank or the federal government. That is the way we think an exchange group like ours should operate in an economy.
Would you be raising capital to support that?
We're raising capital, but it's good to talk about it. The reason why we're raising capital is not so much because we are not the one providing capital that the businesses use, but we want to ensure that we diversify our shareholding and to build new relationships into the agenda which we see as a national agenda. FMDQ Group today is predominantly owned by the banks, but we think we need to deepen relationships with other segments of the market. So we're going to use that capital raise to do that. So the shareholders and the board and the shareholders have already approved that initiative, and we should be able to finalize it this year.
You know my natural question. What's the size?
The size of how much we're going to raise?
Exactly.
I think it was already approved that it would be about 5 billion or any other figure that the board may think they've been empowered. The board has been empowered to consider what is right. Again, as I said, it depends on how much the market can take, but we want to extend ownership of FMDQ to all the segments of the market. And when I say segments, not just banks, we're talking of investment banks, stockbrokers, and everyone. So we can all have an exchange group that is owned across the stakeholder groups in the country.
Are you looking to add equities to your portfolio of offerings at FMDQ Group?
As an exchange, we have the opportunity to offer all products.
When you say opportunities, what does that mean?
When
Is this in your MEMAT or
yeah,
as a business
yeah.
idea?
Right from MEMAT, you can't do anything that is not covered by your MEMAT. So that's where I start. But as a securities exchange registered by the Securities and Exchange Commission, we can go into products that we consider will benefit, will add value to the market. But if you look at FMDQ predominantly, our focus is heavy on debt side and currency and derivatives, and we'd like to deepen that. If we're going to do things on the equity side, we're going to do things that will support the existing ecosystem. So I'm not saying we won't do equity. What I'm saying is we're going to do everything to support that ecosystem. At the moment, there's still a lot of work. I think last week you saw the Nigerian Stock Exchange launch the growth sector of the market. I think that's where the effort should be. The big board, the premium board is already existing, and we see that as the foremost board of equity in this country. So we're going to have to start work with small companies in Nigeria to ensure that they can access capital. And if you look at it again, as I said, that is in alignment with the agenda of the central bank. We all want SMEs to be able to access capital and drive innovation in this country. So that's what I call opportunities. How many companies in Nigeria, how many people are looking for capital, what sort of capital are they looking for? We need to enable that sector.
Wish you all the best in 2020.
Thank you very
Let's leave
much,
it there for today. I'm sure it's a busy Monday morning, first in the new month. You've got a lot of meetings hanging by. Thank you all the way from Victoria Island coming through here to our global headquarters.
Thank you, Bosa. It's always a pleasure.
Thank you. It's good to have you on the show.
All right.
Bola Koko, the CEO at FMDQ Group, giving us insight into the Securities Exchange 2019, 2020, and what lies beyond that. All of that continue to be part of the programming here. Let's take a bit of news, what's coming through that yet to be confirmed. Reports that's been some protests in downtown Lagos around the Jora Olopa, around the ban by the Lagos State authorities regarding motorcycles and tricycles, which are restricted to certain parts of the city. The city's vehicular traffic's been snarling and naughty today to start the brand new month, and everyone is taking that on board this morning. So we have all this coming through in our news bulletin at the top of the hour. But globally speaking, the coronavirus is hammering markets around the world. This is no longer news, but again, it's news if you consider that China, the world's second largest economy, is taking the coronavirus in the chin. That's where it originated from, around Wuhan area. That is denting the Chinese stock market today, nearly 10%, as the Chinese return from their long new lunar year holiday. Chinese oil demand, according to Bloomberg this morning, is down about 20%. The Chinese central bank, that's the PBOC, it's also pumped about $174 billion into its financial markets to keep things a little bit steady there. Oil market, the benchmark crude, which is Brent, is down 56.26 early today, about 6 a.m. Nigerian time. It's been down 5.12% since the outbreak of the coronavirus. Meantime, OPEC still looking for an answer to the current problem. Was the appropriate response from OPEC Plus body? That's all coming through. But let's get a sense of how the global marketplace is moving right now and where we are at the moment. How do we trade the coronavirus epidemic